Hello, YouTube. Stocks are rallying today, so we want to ask ourselves how high we can go and whether or not this 50 weekly moving average, currently at 399.24, is going to hold into the close. So let's dive in and see exactly what it's doing because we now have a hammer formed, a failed breakdown we talked about yesterday, and exactly what we were looking at going into the close yesterday is manifesting so far today. What we were talking about was the nasty cut down, the attempt at a reversal, cracking the short-term downtrend, and then breaking out. Looks like we're going for it right now. So here we have that same pattern where we have our head and shoulders. We break the head and shoulders and break the downtrend, just like over here, head and shoulders. And we've actually poked about 401.44, which is the neckline I am looking at. We hit a high of the day of 401.5. We are invalidating our downtrend, but we have to close about 401.5 to signal a potential trend change. What's a potential trend change? Let's have a look here. The gap up, nasty cut, flat line out. So we're going down, we're going sideways, then we start going back up. And if we look at the retracement of the move, we get up about halfway through, we back test, and then we advance. So what would that mean? Well, for me, that would mean that we're going to roughly advance here to about 405. We're probably going to back test 400 and then go for the full fill at about 415 if we're going to truly go all the way up to the top. So again, we're recording this video intraday, which just means that we don't actually have the printed close for the broader market. But here's what I'm watching for, and you guys can tune in for the final hour for our live stream if you want. I would have preferred if this gap would have been filled at the open. Why? Because then we don't have to question whether or not this is actually support. So because it didn't, this is something that is still an unknown because the market's still open. But as of right now, if we close here on a weekly basis, we're going to be closing over our 50 weekly. We have a failed breakdown and we're at the high of the week, which usually means that we're going to be getting continuation. That's usually, it's not a guarantee. Last thing for us to look at is going to be QQQ. Why? Well, because that same story here, we're talking about a turning point, but it looks a lot more like we're going to be range bound. Why? Well, right now we're battling almost to the cent for our 50 weekly. That 50 weekly is at 296.84. We're at 296.78. So again, very, very, very important that we hold that level going into Friday. We also have a falling wedge here from our all-time high. So our all-time high connect. We have a falling wedge. And our most recent downtrend has been invalidated. We're now over the 200. We gapped up and we're digesting that 296.88 area, which is what? That's the high from our December gap. That's right. So the bulls are making progress. And we're starting to invalidate that same pattern here on QQQ. Also notable that most of the volume since our low going back to January has been mostly green. What else is causing the move today? Well, we got the dollar down a little bit, but off its low. We got VIX down, stomped back below into the teens. We're at 18 right now. 2-year note is up a little bit. We talked about that yesterday. And 10-year note is down. There we go. It reversed yesterday's move. Finally, we got Bitcoin down pretty hard today on Silvergate. And there are some concerns about that. Otherwise, every trillion-dollar company other than NVIDIA is rallying. And every ETF other than semiconductors and FXI are green. So it is a broad-based rally, and things look pretty healthy into this weekly close. Last thing to keep in mind here is just that as a quick preview for where we're likely going to be going next week, there are a lot of points. Why? Well, because today we had ISM manufacturing come out at 10 a.m. It was hot, and normally good data should be bad. So it's really curious that the market's closing up. Is it a trap? Well, we'll have to find out. With all that data in mind, here's why it really matters, because Jerome Powell is going to be speaking on Tuesday and Wednesday, providing testimony. And what's he going to say? Well, probably the exact same thing he's been saying for a while, right? We're committed, 2%, blah, blah, blah. We're going to hear it on day one. We're going to hear it on day two. And then on Friday, we've got the February jobs report. That's going to be a crucial number after Jerome. So if you want to see how the market's going to close, come tune in and hang out with me, Justin from YouTube. If not, I would really appreciate if you could consider smashing the thumbs up and subscribing to the channel. If not, thank you so much for tuning in. I look forward to seeing you at the end of day or tomorrow for our weekend deep dive. Thank you again.